If you were to look up bonds in the exchange, you would find something like this. So, first of all, you'd have a word like treasury. That's name of issuer. Then you'd have a percentage. So it might say 8%. This is the coupon. And you'll find a date. So, 2029. Doesn't have to be 2029, doesn't have to be 8%, but let's take those as examples. And then, price, $113 as an example. Why coupon is $8 and not $80? That's because of something called as nominal value. And usually that's $100, and the nominal value is not the market price. That's over here, $113 in our example. The nominal value tells you what you can expect to receive in coupon terms. And it also tells you how much the bond will be worth when the government buys it back from bondholder. Think of it like buying vegetables. If I go into a grocer and say I want a kilogram of carrots, it's a kilogram of carrots irrespective of who buys it or when they buy it. Whether it's you, me, the grocer, or my neighbor, it's non-negotiable. Whether I buy today, tomorrow, or after 1 year, it will still be 1 kilogram of carrots. So think of nominal value as similar to 1 kilogram of carrot. The price, however, is negotiable. Today, you might be able to purchase 1 kilo of carrot for $1. After 1 month, you may buy it for $2. Or maybe after months, you could buy for half a dollar. So think of market price of bond as price of carrot. So the nominal value is £100 to everybody, all the time. But the market price is whatever the market buyers and sellers say it's going to be. And it keeps changing. To explore more bond concepts in detail, please click on the link here or in the description, or simply subscribe our channel to explore videos on various financial concepts.